Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. Roll time.
There we all know
I can't look at this guy. Like my strategy is, you buy it and you get the internet. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out, and you don't think that anything is wrong. Come back tomorrow and we'll lose it all. Shit should be fun.
Good morning, everybody. It's Friday. I sound all spunky, but I really don't. I feel tight. The way I envision today going is like group nap. Can we do that? It's been a long week. Crazy, and it's been crazy here look, let's come over to the charts here. Especially the Treasury. Man, okay, jeez. So we did all sorts of interesting things this week. Yesterday, pretty big bounce off of the ECB thing, which I never would have predicted. I have to say. That whole thing was not what I thought was going to happen at all. And now look at this, another move higher. Well, it's a good thing that I, didn't take any trades during any of it, right? I probably won't take any trades today because again, I just feel sleepy. S&P 500 doing well as well. So like this is kind of funny because the market seems to be saying that like they're the bonds seem to be moving like recession sort of stuff. It's like it's going risk off. They're raising rates. This is going to push us into a recession faster. It'll be faster before they start actually lowering rates, and so the treasuries start moving up. Equities go up as well. So like I see a little bit of a disconnect. I think that a lot of this is just market dynamics at this time and all those sorts of things. And remember, we got an FOMC meeting next week. So that wouldn't surprise me to just, okay, sideways, and then Wednesday, goodish, right? So let's be cautious about this move. Oil still below $100. Natural gas on a pretty strong uptrend over here. Gold and silver. So gold and silver actually did bounce yesterday. That is most significant update. I mean, come on, look at the chart. Since, even you go back to June 16th, but probably the best one was like way back on June, what day was that? The 10th. Okay, so gold and silver doing good. By the way, the gold-silver ratio is like really high. Like gold is really high compared to silver. So maybe... I don't know. That maybe that's a good reason to buy silver. I don't know. It hasn't worked out very well, that trade. So if you play in that one for what it's worth, okay. Copper kind of going sideways. So I am kind of thinking there still seems to be some concerns about China. Okay, that's one of the big risks. I don't really see people really talking about, but it seems like we got some problems over in China, okay? The dollar looking pretty strong. And cryptocurrencies, a little bit down and a little bit back up, but they're holding the gains that they have made so far fairly well. The market seems to be working really hard to try and create, a bottom here. So in the cryptocurrency market, like it's all manipulated. So why not? Why not? Right? Anyways, so where does that put us for today? Well, if I had to pick a direction, I suppose that I would rather be long, but I don't actually know if that's what they're going to do. I mean, we're just going off of that we just had a really strong up move. So just trying to jump on that, I think, is a little hairy here, like they might give up a lot of that today. And it's Friday, so you might get some of that like mean reversion sort of stuff. Right? AC's turning on here. All right, so we got a couple things that I gotta check on here. First one is, did Jigsaw fix our instrument problems? Not quite yet. Not quite yet. I guess people are spamming me on LinkedIn again. Let's see what they got. Ooh, the Journal of Financial Markets. When is the order to trade ratio fee effective? What else they got this month? Today might be a good day to just try and do some reading. Hey, let's read about mean reversion in the Treasury markets today. That's what we should do. I've been meaning to read that again, and I just haven't. Wow, there's an article about earnings estimate accuracy and gender. That's interesting. Well, let's well, hold on. Okay, so first we need to go to LinkedIn, huh? LinkedIn. See what they want, what they're doing. Oh yeah. You know what, Sam, you got a good point here. Like, come back to the chart. We do need to point that out. When you look at the long end of the curve, at least on the 30 and 10, you are seeing some significant steepening. Although it does appear to be flattening a little bit now. All right. I gotta look at some of this because some of these bars I will get. Oh, where is it? Yeah, you see how some of these bars, the closes are like inside of the opens and stuff. I know it's kind of weird. You probably can't see it, but I want to know why that happens. I mean, those are bars that the way that they're calculated on historical data are, somewhat inaccurate, but I digress. Nope. Not at the moment, but maybe in the future. Oh, wait, what was that? Martin? Takeaways from the investing masterclass I gave yesterday to the Young Cargill Network in Amsterdam. How do you compress thousands of books on investing and decades of financial market history into 1.5 hours? Apply the same approach as in investing. Keep it simple. As financial markets are driven by repetitive human behavior, you should learn from past events and recognize similar situations in the future. Yes. I took the audience through several boom-bust cycles, late 90s, internet stock frenzy, 2008 great financial crisis, the 2012 euro crisis, and the 2022 corona peak. Speculation, inflation, insanity. Conclusions. Find a way of saving and investing which suits your character's goals and horizon and appetite for risk. Define whether you want to trade or invest. Know what you own. If you are not Buffett, investing in individual stocks is hard, so invest in broad indexes like the S&P 500 and MSCI. You buy the haystack rather than looking for the needle. Wow, that I have never heard it put that way. Buy the haystack rather than looking for the needle. There you go. Individual companies go bankrupt. The stock market won't. You learn a lot from investing in individual stocks, especially from mistakes. Reading books gives more insights than reading the daily noise from the financial media. Oh, by the way, we need to change our screen back over to here. Treasuries are moving down. Right. I came in, I'm like, well, if I had to pick a direction, maybe probably longs. They're like, okay, we're going down first. I might not be anything. I mean, well, there's a tick or two up. This might be doing the sort of like, okay, now we're to that point where y'all want to get in because you want to see the breakout, and then we're going to go back the other way. By the way, liquidity is also really shit too. So there are very little, if any, fund managers or advisors who beat the market consistently. No one regrets beating the market at their deathbed. No one regrets not beating the market on their deathbed. I get you. I love this guy. I love reading his stuff. Asset classes, themes, industry sectors, and fund performances mean revert over time. Financial industry wants you to constantly pivot, but this is beneficial to them, not you. Do as little as possible. Investing should be boring. I agree, generally speaking. Like, if you want to, what we do is fun, right? Like, trading is fun. Trying to predict what the market is going to do and playing that game is fun. I think that you want to have your largest wad just in the markets and just slow and boring, right? Start investing now through dollar cost averaging, as timing the market is more important than timing the market. Yes, diversity and build a portfolio which lets you survive all types of market environments. The risk is the possibility to lose money. Your mind or your sleep determine how much you are prepared to lose. Don't use leverage or money you need on the short term. Selling because the investment thesis has changed has merit. Forced selling not. The brutal truth is that you know very little and no one can predict the stock market, but if you believe in the progress of mankind over time, invest. There you go. Achieving financial goals should have a purpose, comfort, freedom, independence, happiness. Keep in mind, though, happiness is not given to us, it is recognized by us. A popular question among audience of mostly millennials and Gen Z: what is your view on the Amsterdam housing market? So this is something that I think is really fun. I saw this article the other day that was like, millennials, houses are too expensive in the United States, so millennials are going over to Europe. They have the same problem over there. It was like the person that wrote this article obviously hadn't done their research because they have the same problem. To calm the housing market down, the key is that central banks need to start pulling away the punch bowl and increase interest rates. Yep. Okay. So we got all that. Next thing then is the quantitative finance section. Simulating financial time series using attention. Well, nothing too interesting on that one. Let's go to the trading and market microstructure specific one instead. Well, Treasury's just kind of bouncing around the lows there. I did find one, so what's the one that I'm finding? With the development of artificial intelligence, more and more financial practitioners apply deep reinforcement learning to financial trading series. However, it is difficult to extract accurate features due to characteristics of considerable noise, highly non-stationary, and non-linearity of single-scale time series, which makes it hard to obtain high, and then there's like a link. This paper, we extract a multi-scale feature matrix on multiple time scales of financial time series according to the classic financial theory, Chan theory, and put forward an approach of multi-scale, stroke deep deterministic policy gradient reinforcement learning model to search for the optimal trading strategy. We carried out experiments on the data sets of the Dow Jones 500 and China's SCI 300. Evaluate the performance of our approach compared to with the turtle trading strategy, deep Q learning reinforcement learning strategy, and deep deterministic policy gradient. The result shows that our approach gets the best performance in Chinese composite and gets an outstanding result in the Dow Jones S&P 500. Well, that might not be a bad paper to look at. I wonder what a DP... Deep deterministic policy gradient reinforcement learning model. That's like... That's a mouthful. I have no clue what that means. What it is. I don't know if you guys really want to read that today, so... Oh, yeah. All right. Oh yeah, you know what else? I don't know. Is Akshay there? Because our the book that he recommended came. The book that he recommended came. Look at that. Stigum and Robinson, Money, Market, and Bond Calculations. When do you? Let's see. Let's read. Because it was hard to get like a whole lot of information about the book online. I could only find it through thrift stores essentially. So it was like $10. Some fundamentals, the instruments in brief. The yield curve. Yeah. Notation conventions used in this book. Interest payment conventions and day count fractions. Discount paper calculations. Interest bearing paper calculations, discount paper applications, interest bonds. The basics. Bonds, measures of yield and other basics. Current yield. Carry calculations. Duration. The duration and value of a basis point. The sensitivity of duration in changes to a bond's characteristics. Convexity. Uses of duration in convexity portfolio. Risk measures, bond swaps. So maybe somewhere in here, but I don't know if the math that I actually want is there. It seems to me like there's a professional out there that would be able to figure out what we're wanting to do, but it's not like a common thing. It's not like a common thing. Well, I'm gonna have to read this book to see, all the way through. It's not clear where the answer might be if it's in there. That's okay though. I've got a big stack of stuff that I wanted to go through, so we can do that today. We can also do a little bit of writing. I was doing some writing the other day. We're making a video about some of the advantages of trading treasuries. So, I had, of course, this less risk. They're really good to learn on. They're economically sensitive, so you get a lot of trading opportunities. And they're really good to have in your back pocket when we have a downturn. But I seem to recall there was a fifth reason that I wanted to talk about, and now I can't recall what it was. So I spent wasted all this time during when I could have been writing last night, trying to remember what it was, and I just couldn't sort it out. So I guess we're doing 4 reasons. Maybe you guys could help me write that. I don't know. We'll do that a little bit later when there's more people here, though. So where is... here we are. Oh, that's not it. Which one is it? Man, maybe I didn't download it. I also had one that was like a queue here, right? Yeah. Oh, I have an article about the Treasury auction process. Ooh. What's this one about? Here we are. So make sure I download this. Watch, I'm going to download it. I'm going to go to the spot where I save it, and then they can be like, oh, it already exists. There we go. Oh, now there's two. This is two different versions of this, but they're both February 2004. So I think that I got the same one here. Okay, I'm gonna do this one after that. Oh yeah, I also opened up this thing from Commons. What data provider do you have? I switched over to Rhythmic, so I'm using Rhythmic right now. I've gone back and forth, but I find that I much prefer Rhythmic, mostly because of the setup that I can have. I very much like the whole, you get the data through RTrader or Rhythmic Trader Pro, and then it can go to multiple applications. Have you read Fibonacci? I know exactly what you're talking about, dude. Which one is that? In fact, I thought I just saw it. Yeah, right here. You talking about Interest Rate, Term Structure, and Valuation Modeling by Frank J. Fibonacci. So you know what, Sharp and Goose? I think that the reality is that for a lot of this stuff that you might get from these serious books, like Stigum is like kind of the old school classic, is my understanding of it, right? Oh, Handbook of Fixed Income Securities. Yeah. I think that the reality is that most of the stuff in those books is way beyond anything that we do here, just trading treasuries and treasury yield futures. Okay. But any knowledge about the market is potentially useful, you know. That amount of context does help, right? But generally speaking, you know, the treasuries are so much simpler, right? The benchmark yields rather are a lot simpler, right? All of this other stuff is just a bunch of math around how much should something be worth, and then, you know, trading it based on statistical arbitrage, essentially. Because a stock is a very difficult thing to value. Every stock is different, and there's so many different inputs that go into it. Whereas debt is a lot simpler. Debt, you can look at a balance sheet, and you just, you know, generally what's going on, and you just you know, there's a certain coupon that comes with the bond, and then compared to what the current conditions are and all, you know, there's like hard math behind all of this, right? So that's why there's so many different instruments in the debt world, and all of this complicated stuff. So you can definitely get super deep into it with all of these books and everything. Are you actually going to use that information unless you're sitting on a desk? I don't know. I've never used it, but I still find some of that context useful. The thing that I'm trying to figure out, so for those of you that haven't been along with us on this journey, we got the treasuries here, And the question is, based on what the treasuries are doing right now, what would be a correct estimate for the micro treasury yields? So I can actually go and look at the cash bond market. And I don't open that up very often. But I won't show it to you guys, but I will open that up from time to time when we're having like big moves and stuff to kind of see where we're at. But that market is not actually as thick as I thought it was. So really what I think we want to do is just use what the treasury is saying and convert that over to the real yield curve. But there's some significant differences, peculiarities about what the futures are actually showing. Like there's an assumed yield of like 4% or something like that. Like there's all these kind of weird things about that, right? So how you convert them is kind of difficult. But that's the thing that we're trying to do is I want to make a chart that says, okay, here's what the treasuries have been doing. Here's what the prices in the treasuries are. Here's what it says the micro 10-year should be. Now there's a basis difference. There's a basis that's about 1 to 2 basis points. So that's kind of a problem. But we'll sort it out. We might be able to do something like estimate what the basis should be based on the time of month. I'm thinking. We'll see. We'll need a lot of data to do that. I don't know if we actually have the data. Oh, Sam, you say that you have different numbers? Well, the numbers should be roughly the same, but there are going to be slight differences between CQG and Rhythmic. But they shouldn't be off. They might be 5 to 10 off. They shouldn't be off by significant numbers. Yeah. Dang, something hit my desk here. Maybe it was the baby. And it really took a chip off of the corner here, and it's like right where my hand wants to rest. So, let's read about profiting from mean reverting yield curve trading strategies. A large class of, well, we'll bring it over here. Bring it over here because I'll bring it along like that, in fact. No, I want to read it over here because then I'm looking more like at the camera. Oh, and do we get, let's just check here real quick. Nope. I think that Jigsaw will fix our little instrument problem here this morning, but who knows when. Okay. A large class of fixed income trading strategies focus on opportunities offered by interest rate term structure. Excuse me. This paper studies a set of yield curve trading strategies that are based on the view that the yield curve mean reverts to an unconditional curve. These mean reverting trading strategies explore deviations in the level, slope, and curvature of the yield curve from historical norms. We consider cash neutral trades with 1 month holding periods. Some mean reverting strategies were found to be highly profitable and outperform on a risk-adjusted basis before transaction costs. Alternative strategies of an investment in the Lehman Brothers Bond Index and an investment in the S&P 500 Index. Even after accounting for transaction costs, some of these strategies are still significantly more profitable than the benchmarks. Furthermore, transaction costs can be reduced substantially by changing the trading frequency or through structured derivative trades. We found evidence that market efficiency has improved and the scope for excess returns has diminished since the late 1980s. Okay, you ready? Let's do it. Off by 100? At what level? Where are you seeing off by 100, Sam? Now I'm a little concerned. 100 is more than it should be. I don't know. And are you saying 100 in the amount of volume or 100 in the level 2? Because if they're different by 100 in the level 2, then that's something's wrong. But if they're off by 100 in like the amount of volume that traded, that probably just has mostly to do with the differences in sync between the level 2 and the actual volume. Okay. Trading in fixed income assets is a profitable business in global investment banks. Besides providing market liquidity through market making activities, investment banks also devote significant amounts of proprietary capital to trade a wide variety of fixed income instruments such as Treasury bills, 30-year government bonds, corporate bonds, and mortgage backed securities, etc. Besides investment banks, hedge funds, and dedicated bond funds also actively pursue trading opportunities in fixed income assets. The strategies deployed range from simple arbitrage trading to complex trades based on technical or market views on the term structure of interest rates and credit risks. These yield curve trading strategies are essentially bets on changes in the term structure. These trading strategies can be broadly classified as directional and relative value plays. Directional trading, as the name implies, are bets on changes in the interest rates in specific directions. Relative value trading, by contrast, focuses on the market view that the unconditional yield curve is upward sloping, and that the current yield curve would mean revert to an unconditional yield curve. A wide variety of trading techniques are used to construct relative value trades based on this market view. However, there have been few efforts to examine the performance of these trading strategies or to compare them with equity investment strategies. So, in this paper, we analyze performance of a specific class of such relative value trading techniques that are directly implied by the notion that mean reversion of the yield curve occurs. We consciously avoid data snooping by not searching through a large number of possible strategies to find a few that are profitable. Instead, we start from the market view that the yield curve mean reverts and derive trading strategies that follow most naturally from such a view. If the level, spread, or curvature is higher or lower than the historical average, bet that the level, spread, or curvature, respectively, will decrease towards the historical average. So if the level, spread, or curvature is higher or lower than the historical average, we shall refer to this class of technical trading strategies as mean reverting trading strategies. Following Litterman and Schnickman, 1991, we consider three aspects of the yield curve, namely the interest rate level of the slope, i.e. the yield spread, and the curvature, and construct a portfolio of yield curve trading strategies centering on each aspect. Okay, so we need to look up a Lederman and Schnickman. What did they do? What is that? And an ISBN number you're giving me there? No. One 15345. Don't know. I think you're giving me an instrument, but I don't know where you're saying. Sorry. I think that they're talking. Oh, wait. 1991. Where is their references? Okay. Common factors affecting the bond returns. Okay, that's this one. We'll save that. Wasn't there other references up here? No. Oh, okay. Man in Ramdal and Dracos. Fixed income, excess returns, and time to maturity. That's Dracos. On Markets Analysis and Strategies by Febosi. Manalal. The relative performance of yield curve strategies. Oh, this is one where I've seen the PDF like many, many times, but I can't like actually access it. Hold on. Maybe. No, probably not. Oh man, it's getting hot in here. Is my well, my CPU usage is fairly high, but am I like pushing the data for some reason? Yeah, it is. My CPU probably is gonna be relatively hot. This paper tests whether the monotonicity of excess returns is linked to maturity differential in a linear or nonlinear fashion. The findings suggest that a quadratic relationship fits the data adequately and therefore imply that excess returns exhibit sensitivity both to maturity differential and also their location on the yield curve. Thus, although excess returns increase monotonically with maturity, they do so at a decreasing rate. Okay. Back to our article. I want to always make sure when I see references that seem to be really significant background information that we kind of at least understand generally what they're talking about. In this particular case, these other papers, I don't know if they're that critical for us to understand what we're reading in this paper. So we continue on. Treasuries at their highs of the regular session, at least. Kind of what I warned about, isn't it? I was like, I mean, they're lower. Maybe they can go lower, but maybe they're just BSing us. And sure enough, right up to the highs. Now it'll be interesting to me because I could see these highs continuing, and maybe we get another big trend, and maybe up to 120. Let's say 120, but they might also just continue to frustrate, right? In this paper, we analyze the performance of a specific class of such relative value trading techniques that are directly implied by the notion that mean reversion of the yield curve occurs. We consciously avoid data snooping by not searching through a large number of possible... Oh, no. I already read that part. To facilitate a consistent comparison of their performance, we impose cash neutrality and consider 1 month holding periods for each category of strategies and adjust the payoff for risk as measured by the standard deviation of the payoffs. So they're using Sharpe ratio. Our study abstract from the credit risk, in particular default risk, and choose as our data set the U.S. Treasury interest rates from the period 1964 to 2000 for our study.
Impose a ceiling on Russian oil
For each aspect of the yield curve, we consider strategies that trade on the whole yield curve as well as strategies that trade on individual portions of the yield curve. Okay, so we're not data snooping, but we did a little bit of data snooping. Gotcha. Our analysis shows that there exists a set of mean reverting trades that appear to offer on average superior payoffs, even after accounting for transaction costs over the period considered on our strategy. We compare these... no, didn't I already read this stuff? The first benchmark is a commonly deployed fixed income strategy referred to as riding the yield curve. Gotcha. Okay. Oh, I love they explain what it is. This involves essentially buying fixed income assets and selling them before maturity to earn the term risk premium. The second benchmark involves a risk-adjusted strategy of investing in the S&P index and funding the trade by shorting 1 month U.S. Treasury bills. Okay. So those are two strategies. So this one is called risk parity, right? And this one, riding the curve. I never heard of it explained like riding the curve as I understood it was just you buy a bunch of different maturities and you continue to do that every year, right? But what they're saying is, but then you sell them before they reach maturity to earn the term risk premium. So there is a period in which you can maximize your profits, I guess, before it starts. So it must be that like the value, isn't it something like you buy it here, it's worth this, but then like depending on what the market is doing, it can go like this, and then ultimately it will come back to the, you want to take this or something like that. I digress. I don't actually know. I just have a hint. I just have a hint of background that kind of suggests that people do that sort of thing. And there is another piece of evidence that they do that. Okay. In comparison, we found that some yield curve strategies outperform the S&P 5 strategy by about 5.1 times. What? No way. No way. And the Lehman Brothers Bond Index strategy about 5.9 times based on a comparison of the risk-adjusted average gross payoffs. There is evidence that market efficiency appeared to have improved over time, and the scope for excess returns has diminished. We also found that the implied transaction costs that would have eliminated the excess returns from the set of profitable and mean reverting yield curve trades is of the order of about 0.01, which is less than the current transaction costs in the market for U.S. Treasury bills. While factoring in trading costs may appear to diminish the profits from some of the mean reverting yield curve trades, although one of the strategies still returns profits that were significantly higher than benchmarks even after accounting for transaction costs. We must add that the implied transaction cost we calculated is based on the assumption of entering and exit each yield curve trading strategy on a monthly basis. The transaction cost can be significantly reduced by structuring derivative trades on a notional basis, mirroring economic cash flows of the underlying yield curve trades, but without actually funding and holding the bonds. These derivative trades are commonly carried out in the fixed income market, and we have the perfect derivative to do that stuff with, don't we?
Solar tariffs.
Hence, the potential remains for more mean reverting curve strategies to yield significant positive results. Okay, so in section 2, we briefly discussed the theory of interest rate term structure and described the construction of the data set, the various classes of mean reverting yield curve strategies that we examine, as well as the 2 benchmarks used for comparison. Section 3 represents the results and discusses the relative performance of the different yield curve strategies against each other. We further compare the performance of a set of profitable yield curve strategies against the 2 benchmarks. Mean reverting yield curve strategies. There's a wide variety of yield curve strategies. The literature on yield curve trading dates back to the 1960s. A sample of the earlier literature includes the Leonidas Freund. I'm not going to read all these. Stiglman Fabozzi. A more recent analysis of the subject are found in Jones, Mann, and Wilner, and Halez. Our focus in this paper on yield curve trading strategies that are based on the conventional fixed income view that the yield curve mean reverts to some historical norm. This market view is consistent with historical experience. For instance, U.S. Treasury bill rates, spreads, and curvature all trade within tight, finite bounds. The interest rate term structures in other countries also exhibit similar patterns. This suggests that some form of mean reversion mechanism is at work that prevents the yield curve from drifting to extreme levels or shapes over time. The market view of yield curve mean reversion is also represented in theoretical models of the interest rate term structure, as discussed in Vasiek, 1977. Oh. Yes. What do you think on crypto? I'm not. It looks like
Russia is working on its own.
I don't like talking about crypto anymore. It looks like it set it up, but I think that is somewhat manipulated, and I would still be very concerned about coming regulation, maybe even further market chaos. It seems like that Sam came in and bailed a bunch of people out. But what happens if the market moves down further and then he blows up too, What's his name? Sam Bankman-Fried or whatever his name is. Yeah. The environment we are in right now is more in line with interest rate extremes rather than reversions. I think that you are probably correct about that, NASDAQ killer. For instance, one of the popular trades is to look at the spread between government bonds and the riskiest junk bonds. And then, when things get really scary, to, fade that spread essentially on it coming back in. And in this particular instance, the spreads just stayed wide. But let's look at the exact, trade and see if we can look at a spread over here to do it, and what the trade would be, right? Okay. In essence, pure expectations hypothesis of the term structure is the theory that the long-term interest rate is the average of the current and expected short-term rates, so that the yield spread is mean reverting. I will read that again. In essence, the pure expectations hypothesis of the term structure is the theory that the long-term interest rate is the average of the current and expected short-term rates, so that the yield spread is mean reverting. Okay. So they have some, short-term rate that they expect it to be at in X months based on the Federal Reserve policy actions. And that is the thing that keeps the rest of the yield curve from going too far awry and mean reverting. Right? Interest rates along the yield curve adjust to equalize the expected returns on short and long-term investment strategies. Furthermore, by incorporating rational expectations, the pure expectations hypothesis implies that excess returns on long bonds over short bonds are unforecastable, with zero mean in the case of the pure expectations hypothesis. Any arbitrage opportunity should be captured and realized by investors immediately. Therefore, by the pure expectations hypothesis, yield curve trading strategies attempting to exploit I think they misspelled that, abnormalities or mispricings in the term structure would not yield consistently positive payoffs. Oh, okay. The expectations hypothesis of the term structure therefore stands in contrast to the practitioner's view that it is possible to construct mean reverting yield curve trading strategies to generate consistent positive payoffs. Broadly speaking, mean reverting yield curve strategies attempt to take advantage of deviations in the current yield curve relative to an unconditional yield curve. Three commonly used trades are A, bullet strategy, which is constructed so that the maturity of the bonds are concentrated at a particular part of the yield. B, ladder strategy, which involves investments across a range of maturities. And C, barbell strategy, which are constructed, for example, by investing in two ends of the yield curve and shorting the middle portion, or vice versa. It is easy to see that bullish strategies are essentially bets on the level of interest rates, while ladder strategies and barbell strategies are bets on the yield spreads and curvatures, respectively. Okay, so what he's saying is one strategy is I go long in all four of these. One strategy is I go long one side and short one side. And another strategy is like I'll go long the 2-year and long the 30-year, but I short the 10-year or something like that, right? That would be the barbell strategy. It has a big old order there at 26.5. What's with that? This is kind of giving me, well, let's try it. This is kind of giving me level break vibes again. Here's the S&P 500 opening. There have not been systemic efforts to examine the performance of these trading strategies and relate them to the predictions of the expectations hypothesis. An exception is Culbertson, who computed and graphed holding period returns between 1 week and 3 weeks for short and various long-term Treasury securities. He found that the holding period returns were very different from observed spot interest rates and concluded that the pure expectations hypothesis did not hold. The predictability of the spot yield curve and forward interest rates as implied by the expectations hypothesis has also not found unambiguous empirical support. Schiller, Campbell, and Scholenow showed that the term structure does not provide information on the future change in the short-term rates. I think I should... No, I'm going to leave that one there, but I will just kind of trade market make on the buy side here. Wow. Okay. Do you see how they just slammed it back up there to the top? Something's going on. He thinks something is going on here. Let's see here. Moreover, as Cox, Ingersoll, and Ross first showed, the different versions of the expectations hypothesis are not theoretically consistent. And Mankiw and Miron also found that the predictability of the term structure disappears after the founding of the Federal Reserve. Oh. Subsequent work by Rudenbush and Balduzzi, Bertola, and Baresi also found that changes in the interest rate were due to unexpected changes in Fed targeting. Okay. What I'm doing here, I'm just kind of realizing how risky what I'm doing here is, because if that big bid at 26.5 disappears, like, man. I mean, I can definitely see the case for them continuing higher, and it really does look to me like they're getting like popped like a pimple. But there goes NG to the moon again, really? Let's see here. Ooh, yeah, natural gas is popping hard. And the S&P 500 are on the downturn. There you go. There's my fills. There's new highs. Now, I don't know if I want all of these here. Guess we'll see.
So in 10 minutes time now at 9:45 a.m. Eastern time, we do see the US S&P manufacturing PMI flash, as this data is for July prelim data. Forecast 52.7 from the prior 52.7. Composite PMI flash.
Oh, that's right.
Forecast 52.4 on the prior 52.3. And the services PMI flash forecast 52 on the prior 52.7.
Okay, so in about 15 minutes we get the PMIs, and that's the most significant news that we have today. Normally that is not like a really impactful move, but it has been as of late because we're really interested in like the manufacturing and economic activity. And also, it's like the only thing we got going today. Anyways, so that news here in about 10 minutes is going to be important. There is definitely some size there at 120 evens, isn't there? But what do you think is with the size at 26.5? How long has that been there? Can I see if I click here? Does it show me? It's been there ever since we pulled up through. That whole thing is kind of makes me nervous. Again, it's like, okay, so why is it there? Right? Why is it there? Doesn't need to be there. Could come crashing down. They could cancel it. Could come crashing back down to 23.5 really easily. kind of feels to me like they're trying to coerce us into everybody going long. Well, there was 10,000 traded at 28.5. So, I don't know. I guess I'll take it there too. 2,200 iceberg there at 27.5, huh? I don't know. It kind of looks like they're defending it, doesn't it? You don't think it even matters that it's there, what, the 26.5? I suppose from our perspective, it doesn't really matter, does it? Oh, wait, did I have that wrong? Yes, I did. Octavia says it's a value area high. Yeah, actually, you're right. That's a good point. You can see it there with where the blue on my DOM stops. See, normally, I think that if I was putting live trades on here, I don't think I would do it. That big order just really makes me nervous. Okay, well, they traded it a little bit, and look, they're even willing to offer 1,000 up for it, but it's not pulling. So it kind of feels like that somebody's trying to call the bluff and it's holding. So that might be a positive sign. Getting lag on Tradeovate? That's CQG. I think all of the data platforms have been having trouble, relatively speaking, this past week. So it's been a crazy market.
In 5 minutes time now at 9:45 a.m. Eastern time, we do have the US S&P manufacturing PMI flash. This is July prelim data. Forecast 52.7 from the prior 52.7. US S&P composite PMI flash. Forecast 52.4 on the prior 52.3. And the services PMI flash. Forecast 52 on the prior 52.7.
So by the way, here with like all of the PMIs, like we got services 52.7, manufacturing 52, and composite 52.4. Remember that this is like a composite where like 50% is like neutral. So like if we get a number below 50, that would be really significant to the market, right? Are they expecting good news? I don't know. The S&P 500 seems happy, but I think that what we're getting in the S&P 500 is not so much a call on the larger overall economy as it is stock buybacks and other kind of technical flows coming in. There was a report yesterday from the desks at Goldman that a few significant buyers were, slowly coming into the market and nibbling a little bit every day. Okay, now now they put a big one at 28. I'm going to cancel this right here. Oh, did I get it? Nope, I didn't cancel it. Darn. That's pretty freaking aggressive, man. I feel like I'm saying this all the time now, but I have not seen aggressive action like that in the 10-year Treasury in quite some time. And by the way, this thing is thickening up. Step up buyers. Yeah, it's kind of funny that they started the session going down, right? Then all of a sudden, oh, level break. Oh, huge stack. The only thing that would be better would be a huge iceberg at 29. Like a 3,000 lot iceberg at 29 or something like that. And they slam it up there, man. I don't even know if I want those limit orders up there, because if it pops, it might well go through 120 quite easily. It still kind of feels to me like, why is that necessary? But with the way that the market reacted to it and everything, maybe somebody just really wants, he doesn't necessarily need to have it. And maybe it's like, well, if you're willing to go there, I'll take them. ZN is lagging ES by seconds. What makes you think that?
I'll be leading with the US S&P manufacturing PMI flash.
Yeah, everything looks fine to me. These PMIs, there must be some bets on the PMIs, man. Well, we've got about 30 seconds to go. I am seeing a little bit on the inside pulling, but those large orders remain.
Ten seconds.
Here we go.
52 spot 3 high.
Oh, shnikes.
Composite PMI.
The services PMI was 47 versus 52.7, so services were really bad.
Services PMI
and my data feed cannot keep up.
52.7.
Holy
shit. Both
shit.
services and composite from the S&P there. Just note we are seeing some downside movement in the Dixie there following the contraction in the S&P report. S&P 500 also going down. Gold seeing some upside movement.
Can't freaking believe this. Oh my gosh, for real? Wait, what? Well, they took that guy too. Somebody stacked 2000 at 05.
Looking at the breakdown.
I think we have to say somebody knew, yeah?
March 2021 input price index.
I have never seen that degree of aggressive pressure just before a significant economic release. Never anything quite that extreme.
Manufacturing employment index falls to the lowest since 2020. Services employment index falls to the lowest since February.
Okay, well, I took profits on most of it. Well, let's just let the last contract ride. No, there was news. There was news. So let's repeat. We had the PMI numbers. US S&P Services PMI flash reading 47 versus an expected 52.7. And remember, this is an index where 50 is a neutral reading. So we basically, 47 is basically a negative reading. We got a negative reading when they were expecting a positive reading. Manufacturing was actually slightly better than expected, 52.3 versus 52. But that services PMI and then the composite, that brings the composite down, right? Because they were expecting 52.4 and we got 47.5. Okay. So that's a pretty negative number.
This report is
Listen, it's this report is usually not like a huge mover. Oh, we shouldn't be reading out the squawk. This number is usually not a significant number. They've been paying more attention to it in the recent past, and given after all of the genius that we've had this week anyways, and it's the only thing today, that's kind of causing it to have an outsized impact. But there was very clearly somebody trying to front run it before the economic news. The Treasuries were very strongly bid before it came in. Now, interestingly enough, the S&P 500 is not really moving all that much off of this. It's the Treasury market is the one that's just like flying off the hook here, right? So I because my DOM was getting so slow and everything, and I was a little bit nervous, I was like, okay, let's take 5 of the contracts off. So I only have 1 contract on. Oh man, because I could be up like 2,000 or 3,000 now at this point. Whew. It's they were leading yes, not lagging it. Well, yeah, you got to be envying the volatility in the Treasury right now, right? But I'm quite interested. I'm very interested why the S&P 500 is not moving more. Why is it that the Treasuries find this so significant and the S&P 500 barely even cares? That seems a little bit off. Not sure that makes sense. Look at this. It keeps going. Like here's the crazy thing about this, right? Was that we were all looking at it like, it looks like they want to get to that 120 level, right? Badoosh. That was so what? What? Somebody knew, man. Well, they think they can hide in treasuries? I don't know, man. Like if it was just a flight to safety thing, I would expect to see the S&P 500 just totally crashing. Right? The way that it's trading right now, it seems to be behaving like this news only matters to interest rates and not really to the S&P 500 as a whole. Or it could be maybe to some extent that it's like, well, this is what is the correct terminology here? This greatly increases the chances that the Federal Reserve has to back off raising interest rates. Right? And if that happens, that's good for stocks. So it could be that, right? But the market seems to, I think overall though it's a read that the economy is kind of getting worse, right? So I don't know. Okay, here's my stop. Here's my stop. Can you believe? $26. So wait, if I had done that completely. What was the max that I could have gotten on that? If I had done that maximum optimal. Max quantity was 6 times 26. 156 times 15.0125, right? 23. And I made 1734. So so there was maybe another 30% in that. That's not bad. That's actually not bad. All things considered. That was funnier than it deserved to be. Seriously, dude. Or you know what, Sharp, if you really traded that though, okay, I just feel obligated here to acknowledge that what I was doing here, this was a sim trade, and that what I was doing was quite reckless. I have never seen a trade even remotely close to that, where they were that aggressive going into the news and giving me signals like that. And I was preferring the long side, largely because of the last, day's action and overnight and everything. And I did expect the PMIs to be bad, but I never in a million years did I expect it to react like that. And if that had been a live trade, I probably would have taken it off. Can you imagine, though? Like, we were at 3% yesterday. Now we're at 2.75. We've just come off a quarter of a basis point all of a sudden. Like, for any of this to make sense, they basically have to be like, the Federal Reserve is going to raise interest rates 50 basis points next time. Or maybe they won't even do 75 basis points next week. Like, they're definitely not doing 1%. They're definitely not doing a whole 100 basis point increase next week now, right? I still kind of think that well, I thought that 3 was too low. 2.75 is definitely too low. So let's just kind of so again, we're at 1.5 right now, right? So we're going to be at 2.25 next month. So if in September, not next month, next week, okay? So if they raise 50 basis points in September, then the federal funds rate will be at 2.75. And that's what the 10-year is at, right? So the bonds seem to be making a large fundamental call on the overall economy. I have to say, I'm obligated to say. I don't have to say. The thing that I had to say was that was a sim trade, and what I was doing is very, very risky. Okay. And I normally would not have done that because I've never seen a situation like that before. But here's the prediction that I will make. The next CPI is so massively important now, right? If the next CPI is hot or above expectations, this market is going to go nuclear, man. Because these bonds are basically saying like that the Federal Reserve is going to back off now at this point. Yeah, that was gambling, at least for me. Okay, good job. As long as you understand that, Sharpfingers. So the thing that here's the thing, that reason why that gets me triggered is I wasted a lot of time. You can see it at the beginning of this stream. There was a lot of things that I understood, and I didn't necessarily completely stick to what I knew, because I didn't really know why I knew it. I trusted the guy, the gal, it was a very nice lady, that told me these things, at the Goldman trading desk. So I kind of generally knew these things, but I didn't know how they knew those things. And so I guess I didn't completely trust it. I was like, well, but we can still do this and this and this. I wasted a lot of time at the beginning, and I thought that they were working. I went through many periods where I thought these things were working, and then later on I come out and I find out, oh no, like I had actually like literally just gotten lucky. Like the worst thing that can happen to you in trading is to come in and get lucky right away. I mean, in many respects, it's the best thing that can happen to you in trading, because that can give you a ton of capital to keep playing for a really, really long time and figure it out. But in many respects, it's the worst thing that can happen to you in trading, because then you start buying your own bullshit. You think that it works and you start doing that all the time. So that's why I find it so important to point out in these kinds of situations that was a good, I executed that trade pretty okay. I was kind of dinking around, and I was just trying to take advantage of the I was market making there. And then, I ended up in a big position and badoosh. Okay. It was really risky though. Okay. So I executed it well, but like the larger overall, like how much risk I was taking on and everything, I was dinking around. And if you go around and you trade the way that I was just trading there, in regular circumstances, you're probably going to get hosed most of the time. Okay. So I don't want anybody to look at that and be like, this is the way to trade. Well, it does look like that we've maybe seen the high, at least for now. I'm kind of curious if they can get back to 120 or not. So far, no, they've been stuck in this 04. They haven't been able to really get below 04. Anyways, man, if the next CPI is bad, then all of a sudden the Federal Reserve is going to have to hike at least 75 basis points again. They do 75 basis points next week, and then they do 75 basis points in September, and that would put us at 3%, which is above where the 10-year is right now. So in order for this to happen, the market has to be saying that they're only going to do a 50 basis point hike in September. Okay, I'm hearing my news squawk saying right now, let's go to the... You listening to me over there, Financial Juice? Because if you are, I'm flattered, and I just wish you would come and chat a little bit. That's all. Tools, not Treasury Watch. We want Fed Watch. Fed Watch, countdown to the FOMC. And 150, 22.5. I don't think that the tool is showing me the correct probabilities, because it's still showing me 75% chance of 75 basis point hike. Right. Because again, we're at 1.5. So 2.25 is 75 basis points. So 200 to 225. That's 0% probability. Oh, by the way, let's do like the whole compare thing. Right. Actually, less probability than it was like on the... Oh, no, wait, today. Oh, it has changed. Okay, now it's showing me. Okay. So now they are showing there's a 10% chance that they actually only do a 50 basis point hike. And what about September? Well, it looks like they're predicting 2.75 right now. But there's still a lot of bets that it'll be 3. And even some that it'll be 3.25. All I know is they've done a bad job at it. Well, I wouldn't say that NASDAQ killer. Like here's the thing: is doing a good job on monetary policy. It's a lot harder than you think. It's as hard as trading, if not harder. Okay, so it's just like in trading. Listen, if you're beating 75% of traders, that's probably still losing, right? And it's the same thing with the Federal Reserve. You know, there are going to be times where they get it massively wrong. There is. The question is just, is the world better off with them than without them? Well, it has decreased financial instability. The markets are much more stable than they were in previous centuries. Much more stable. But are they starting to lead us down an unsustainable path that's going to result in a really big blow up? I wonder a lot. A lot. And have they made mistakes in this economy? Absolutely. But you know what? You kind of almost have to expect that they're going to make mistakes in this economy, man. I mean, nobody really understands this thing. We've never seen anything like it. Global supply chain disruption. We have no comparison, really. You know. Now the natural gas thing, it has more to do with Germany and Russia and all them. Okay, well, the S&P 500 did eventually turn down, but and the dollar back below 106. That is a significant drop below. So everybody was like, "Oh, the euro is definitely going to go below parity now." Then the US is like, "Hold my drink." Well, we still got an hour left. We will refresh this page here in an hour and see what they're looking at, the probabilities. But for the 10-year to be at 2.7, they can't, we're gonna type this out. Market has been expecting a 75 basis point hike next week and another 75 basis point hike in September. That would put us at 300 basis point. And right now, the 10-year, right now, ZNF hashtag 10Y. So who is right? I suspect that the benchmark yields are actually more correct. Oh, is that 3 point, or is that 2.75? 2.75%. How do I say this? In the short term, all I know is buckle up, cupcake. The ride is just starting. It could be. I have to like here's the thing, guys, is right now the prices and activity that I see in the market is like we were really scared about a slowdown, and the slowdown happened, but this is not the same slowdown as other things. Like it's not the same thing as a recession as what we normally think about as a recession. For instance, employment is still very, very high. So if we are going to go into like a true recession, if we're going to go into a true recession, quote unquote, then that recession is going to be super ugly. I've always said, oh, you know, like I think that we could go into a recession, but I think that it'll be a relatively mild one, right? That's what we're in right now. Market is starting to give us hints that like something much more ominous is on the horizon. Now they could all be wrong, but oh man, because just imagine if that again, if the next CPI report, the beginning of next month, so in September, if the CPI in September ends up being high, then that means that the Federal Reserve will have to raise another 75 basis points after that. The 10-year yield is going to have to go up to 3% at the very least. And yeah, is that going to destroy the economy? It could. But at that point, you're going to, here again, I see a really big, it's just too big of a divergence, right? How can you have the federal funds rate invert the 10-year yields? That's just stupid. That's just frankly stupid. And the treasuries are basically doing that because, hey, they're going to have to back off. But like, if inflation stays high, they're going to keep the interest rates high until the inflation comes off. You know. And they might not come back as far as they think. So like, and when the treasuries, when they make big bad bets on the treasuries like that, and the liquidity is already kind of bad, so you're gonna see, you could see some really nasty stuff. You could see a complete blow up of the treasury market. Who knows what else? Natural gas taking off sure is something else. What do you think is with that? I've had a hard time reading natural gas just because what we got over here is the US market, not the European market, essentially. So it doesn't always react to, you know, the headlines coming out of Russia and Germany and everything the way that I would expect, you know. Wow, top US refiner set for a 652% surge in profits. What? Pelosi, but Pentagon might be worried China would shoot down her plane if she visits Taiwan. Well, listen. Oh. Wait if war continues. Now that's an interesting thought, live action, because remember when we were all being told that Russia could not continue this fight up past May? I think that report was maybe actually probably true. It was just that that was with the strategy that they were pursuing at the time, and they backed off. They stopped moving in towards Kiev, minimized their mission. What do we say? Minimize, not minimize, but they brought in the scope of their mission to only taking over that eastern part of Ukraine, and started to play on a battlefield that was much more favorable to them, right? Because in the cities is not favorable to them. But if it's just shelling each other, that is favorable to Russia. I'd say favorable to Russia, but for them winning, but it's still kind of a bum deal, because they've essentially, my understanding is that they are hurling so many shells at each other. Like, Ukraine is basically out of ammo. Russia is really hurting, and like their guns are like no longer accurate because they've shot them so many times. So I don't know what the end game of that is. I suspect that Russia will eventually, after a long, hard-fought war, will win and take over Ukraine. And then Ukraine will embark on a guerrilla campaign against the occupiers, right? So I think that Russia will win, but at great cost. Like, here's the thing that I don't think... Oh, man. I saw this video the other day. I wish I could find it again, but it was so good. So Russia is experiencing a significant demographic decline. And I mean a significant demographic decline. So like there is just the next generation of people, there's just straight up less people. Okay. And a lot of the schools and all of these sorts of things are kind of destroyed. So essentially what it comes down to is Russia does not have enough skilled workers to maintain their infrastructure in the next 10 years. Like there won't be enough engineers to run their infrastructure in the next decade. They're going to have to turn completely inward, and it's going to be a problem. Okay. Now, Russia has always kind of had these security concerns. So they have areas that they basically want to control that are kind of bottlenecks into Russia. So if they can kind of take over those periphery areas that have strategic value, then they believe that they are more secure. Not that like anybody really wants to take over Russia, as I think that it's really like, hey, Russia, if you just like left everybody alone and minded your own business, everybody would be happy. We could be doing the same kind of business with Russia that we've been doing in China, and everything could be hunky-dory. But no, we have to be, you still have some of these ideas from the Soviet era that they can't let go of, right? So they're making these moves. They're making these moves because they're never going to be able to do it again. You think this escalates before Russia gets near stealing Ukraine? What, you think that the West will get involved? I don't know. Well, here's the thing that kind of gets crazy is that like Ukraine is only part of it. So if this is really about Russia taking over strategic areas because they're never going to be able to take them over again, then they're going to want the whole rest of the Soviet bloc too. I believe that the Treasuries are retracing that whole move now. I'm kind of wondering now if that move in the Treasuries was just really overblown just because of the volume. Like we were saying, the S&P 500 didn't react to it all too strongly. The Treasuries may have overreacted. Anyways, if Russia decides to take over those other areas, then you're talking about like Latvia and part of Poland and all of these things. So now you got like the whole World War II thing again. I hope it doesn't go that far, but yeah, thinking about the Ukraine war continuing into winter is kind of interesting to game out. I'm not too, the thing that I think is really hard for me to sort out with the Ukraine situation. Of course, I don't really understand the military part of it very well, but there are some creators and reporters and stuff out there that are very, very aware of what is going on. And even though there are extreme efforts by people on both sides to try and, distort our perception of the war, I think that we can get a pretty good idea of where things are going. And Ukraine has very much outperformed, but it's going to be costly for both sides. Okay. But the political implications of this is kind of weird to me. No, Ukraine gave up their nukes. That was the whole thing, was that they, excuse me, I don't know why I all I ate was a banana and oatmeal, but I keep the air is still readjusting. Ukraine gave up their nukes in exchange for security guarantees, and Russia is violating those. So I digress. What are the political implications of this? There are some people on the far right. What is the deal with them? Is it really just that they've been suckered by Russian propaganda, or that the people that I'm seeing from the far right that are doing this are just straight up Russian propaganda? Because I see a lot of stuff on like the hardcore Donald Trump forums and stuff, basically, completely on Russia's side, frankly, saying that Zelensky is corrupt and that what Russia is doing is a good and righteous cause, and that Russia is like just straight out winning everything. It's got to be Russian propaganda, right? Because it's so far out of line from the news sources that I'm seeing that provide direct evidence about what's going on and are really taking a scholarly academic perspective from analyzing the conflict. The Democrats, they don't like to have these excursions. I don't think that they're happy that we're giving all this money to Ukraine, but I think that largely they support it. How much money can you give Ukraine? How much money can you drain down this hole before you go, well, okay, it's not worth it? I just the whole thing is kind of weird. I think both sides are crazy. I think that there's a lot of human society is just not adjusted to the internet, man. That's really what it all comes down to. Like, can I try and speak a little bit higher level about this, since it's Friday and I haven't indulged in this sort of thing all week? It's about conservatism versus liberalism, really. And when I say conservatism versus liberalism, or progressivism, let's say, what I'm talking about is having a reverence for what came before us and the systems as they currently exist, versus wanting to tear down the system and start anew. Okay, so I would call myself a conservative on that side of the argument for one primary reason. I mean, I think that I extend a lot beyond this, but if I'm going to make my case for conservatism, it's this. Every time that you have like a straight up revolution to bring down the system and replace it with something new, it doesn't work out very well. Every freaking single time, okay? Now you'll say, but what about the United States? But that's not really quite what the United States did. Like, the United States had its own thing going on over here, and they basically just decided, no, you know what, we don't need you anymore. We don't like what you're doing. Right? And then they broke off. So yeah, then at that point we had the opportunity to build a new system, but it was kind of building a new system within the confines of an existing system, right? And I think that's what made it so successful. It's like, okay, so then we had a military and all of these things. That's how we were able to have the Civil War and win, right? Then we had the Confederation of States, or what was it called? I forget what they call it, but before the Constitution was written and everything, that was kind of a disaster. But then that body came along and made the Constitution. So it was really a case of the establishment, the people in power, the politicians, understanding the system really well and coming up with a really great solution to it and it working out, right? So it wasn't really a tear down the system kind of a thing. But then you look at the French Revolution, that was absolutely tear down the whole system. What happened? It was a disaster for years and years and decades, frankly, before the French kind of finally worked it out and got a good government together, right? And even to some extent, like you realize that the current government of France was basically reconstructed after Germany and even kind of had some of its own controversies before that. So, right. And then we all know about communism, right? Okay. Tear down the system and put something in its place doesn't work. Now it's hard because sometimes power structures can become entrenched that can be incredibly negative. And I see a lot of that in our society. It seems like it's really, really difficult for us to overcome those. But the U.S. system does provide a way for that to happen. And I think over a long enough period of time, we will eventually prevail on those fronts. Like this whole thing with Nancy Pelosi doing those stock trades and making like $1 million off of this congressional bill and everything. That's such total BS, man. Eventually the public is gonna force Congresses to do something about it. Like seriously, that just shouldn't be allowed. Okay, so that's why I kind of come down on this. Listen, you don't want to tear down the whole system. Okay, the reality is that humans have been on this planet for thousands of years. There is some evidence that suggests that human societies have been around much longer than we actually think. That there is some evidence of significant human societies even into the Ice Age. Okay. And over those thousands of years, we have developed structures that were, the best solution we could find to the problems that we faced as a society, right? It's very foolish and arrogant to think that you, a 20, 30 something year old person with your 30 years worth of experience, knows better than millenniums of evolution. You know what I mean? It really is. It's like, listen, the society developed the way that it did for a reason, right? And there's societies that have tried some of these other things and they failed, and there may have been other societies that tried certain things and they would have been beaten out by the societies that kind of had that led to what we have today. Okay, so we should have a reverence for the past and the power structures that exist, and we should take an academic and empirical approach to changing them. To say, okay, well, this is the way that the system is right now. First, we have to really understand the system, which in and of itself is very, very difficult, and identify the problems, and then say, here's how I think that we could try and address these problems, and through a sequential process and so forth, we can find good solutions to those problems. That's a great way of going about changing society. Okay, but here's the problem: is that we've had two changes in our society that are just so extreme that our systems can't deal with the change fast enough, right? Our systems can't deal with. Wait, AOC does not know what's best for us. Okay, those two changes are the pill and the internet. Okay, the way that our systems work, like for instance, agriculture. Okay, agriculture came along, and over thousands of years, we developed agriculture, and we developed our societies around agriculture. What is the platform on the screen? I use Jigsaw Day Trader. I am an affiliate for them. So if you look in the video description, there is a $100 off coupon if you choose to buy the platform. So you can get it for like $450, something like that. It's the best DOM. I really love it. So anyways, and I have a video about Jigsaw and why I use it. If you want to go and search for that. So it's like, what is the best day trading futures platform? Our society is simply cannot adjust quickly enough to deal with the pill and the internet. And I think with the internet in particular, it seems to affect our brains. It seems to affect like the way that our children develop and stuff. And we don't understand it at all. We don't understand the implications of these things at all. And we're faced with all of these problems in our society that, how do you sort them out, man? Like seriously. I understand the position of some of these boomers that are like, we just need to go back to the way that things were. Shouldn't be any pill, etc., etc., etc. Because, this causes problems. Okay, it's causing problems. And listen, like complete societal collapse, it's not like out of the question. Okay, it's not out of the question to happen. So the question always comes back to, how do we develop systems and processes and so forth at a societal level that will ensure continued progress in the future? Did you know that the average generational wealth only lasts 3 generations? So like if you become a millionaire or billionaire or whatever, and you give money to your kids, on average, after about 3 generations, they'll just be like regular people again. They won't be rich anymore. How do because essentially it's too difficult to build something that, allows your kids to continue to be as successful as you were, right? I guess that, to some extent there has to be a lot of luck involved too, right? So that could be part of it. But, now there are some families that have been able to keep that up for generations and generations and generations. I think that we should look more to those and see what they're doing, right? But back to the question, how do we deal with the internet, right? There's so much information out there on the internet. It's, how do you determine what is accurate information and what is not accurate information? And how do you do that in a way that is fair so that, it doesn't just become a structure that the establishment can use to squelch dissent? These are all, nobody has a good answer to these, man. Nobody has a good answer to these. So that's kind of like the higher level deal. I see a lot of kids seem to be, frankly depressed on the internet a lot, depressed. Who causes that? There's a study out this week. Well, it's not the first study to have said this. I actually found studies from much further back saying this, but they're basically saying, well, everybody thinks that depression is primarily about you don't have enough serotonin in your brain, but it seems that that's not the case. Like the theory that like that's the primary cause of it or whatever seems to be not the case. Doesn't mean that it doesn't play a role, and antidepressants do have some usefulness in treating it, although it only cures it in something like 40% of patients, but it's better than the placebo. Okay, so it definitely plays a role in the whole scheme of things, but in terms of like that's like the sole cause of everything, it's not. So why do so many people deal with depression and so forth? Let the vegan Democracies munch on that strawberry flavored soy milk in oblivion. You know what, Nasdaq killer. So this is another perfect example though of where like we have problems with the internet. Okay, like I've definitely seen this sentiment around in right wing circles that like they're trying to turn us all into vegans essentially, but no serious country is actually pursuing that. Okay, they are pursuing these climate change initiatives that are really stupid, okay? But country don't want you to become vegans, okay? Vegans, see, now I have to say something controversial and not completely proven. But from the research that I've done on the subject, veganism is like a complete farce. Like nobody stays vegan. Like the person out there that they've been vegan for like 30, 50 years. They love the life cycle style. They're happy. It doesn't happen. People do it for a few years. They start to experience health problems and then they switch back to regular food. And governments know this. US government knows that part of our strength is how healthy our well, not how healthy. I mean, it's a big liability how fat we've become, right? But we get a lot of protein in our diet, and we have a lot of strong people in the United States too, and we have a lot of tall people in the United States too, and that's a big benefit. And so no country is, I think, out there intentionally trying to make their population weak, because yeah, you want them weak to be able to control people, but going into the geopolitical environment that it looks like we're going into right now, you don't want to be easy pickings. You know what I mean? I know many vegans since their birth. Really? Let's see if I can find the stats. Let's see if I can find stats. %84 of vegetarians/vegans abandon their diet. That's all. That's all. I don't think that's YouTube will be mad at me for saying that, right? The thing we can't talk about is abortion. Okay, we start talking about abortion methods, then YouTube might get mad at us. That's the thing that they're concerned about right now. So you don't want to go on that one. Yeah, it's too restrictive, to be honest. That's why they fall off the wagon. Well, and again, it's kind of this whole thing that it comes into like, okay, well, it's animal cruelty. The world is cruel, man. Hopefully there's a God. I believe there's a God, because if there's not a God, then nature is just cruel, right? You watched Bambi. That's what we need. That's what our kids need these days, is they need to watch Bambi. We watched Bambi last Friday. I was like, I'm not sure I understand this movie, because the moral of Bambi is basically like, nature is cruel, nature tends to win. That's what I think Bambi is about, right? Nature's going to win, and we as humans are foolish for thinking that for not taking it seriously and not respecting it. That's what I should say. Yeah. Humans are stupid for not respecting it, right? Because the whole thing in Bambi is like, his mom dies, so his upbringing is super, super hard. And then what happens? None of them want to, like, this is the scene that I always remember. Okay, is You know, Bambi, it's springtime. Bambi's got his buddies Thumper and what was the name of the skunk? I can't remember the name, but I loved Thumper though when I was a baby. Did you know that Bambi was made in 1942? It's an old movie like this. So this movie was made before your parents grew up on it. You maybe grew up on it. I remember watching Bambi as a kid because like Disney released it on video when I was like born or something like that. Okay, so we're watching Bambi. Okay, the big scene that I remember is Bambi and Thumper and the skunk are coming out after spring, and the owl warns them that people are getting Twitter baited. That's what they call it. And they're like, oh, I'm not going to get Twitter baited. And then one by one, the females come and pick them off. First one, it's the I think the skunk, right? The skunk meets a female skunk, and they're like, well, we're just going to run off in these flowers here now. Sorry, guys. And Thumper is like, no, that's so dumb. That's not going to be me. And then the girl bunny comes along, and you know what happens. And then it's the same thing with Bambi. Bambi is like so naive here. And the girl, she takes him away too. I don't understand, why does Bambi not have a son? I mean, I think that they're in that video that Bambi did conceive a son after that, right? Okay. You can fight it. That's the whole thing is like, well, you can try and fight nature, but nature always wins. That's what the movie is all about, guys, right? And then there's the whole thing about the fire and everything, and he protects the woman, and he does the things that you do in nature to protect the women, because the women are more valuable to your reproductive success, right? And even though the humans caused the fire and everything, the animals survived and the forest goes on, right? That's the moral of the story of Bambi, guys. Nature is hard. Better respect it. Right? So to come in and just say, well, yeah, I know that we've eaten animals for thousands of years in it, but that's, you know, that's cruel and we should change that. Okay, you go ahead and do that. I'm going to stick with what nature decided. Indian cuisine has too many vegan/vegetarian options. Oh, I love Indian food too. I really like a good korma. Is that how you say it? For a curry. That's the best. That's the best kind of curry. It's korma. Wow, I like G.I. Joe. When I was 4, I have a picture of me with a World War II helmet on that covered my head shoulder to shoulder with a Thompson 45 machine gun. Things have changed. Bambi? Come on, you didn't watch Bambi as a child? Again, it came out in 1942. Stick with a rare steak. I haven't had a good steak in a while. Now I kind of want a steak. Can you believe they came all the way back down here to the lows? It looks like they may come back to 120, but man, they sure traded a range after that. I think some of what might be going on here, though, might be the yield curve. Although I'm not entirely sure because the spreads aren't giving me a super clear direction. They've kind of reverted both ways here today. What else did I watch? No, listen, you know what I really watched when I was a kid? This is what I need to do this weekend. E.T. E.T. was what I watched when I was a kid. And I remember my parents said that it was really sad for me when like E.T. died or went home or whatever it was that was sad to happen. There's a sad part of the movie and I thought it was really sad. There was also Land Before Time. Were any of you guys Land Before Time fanatics? I mean, I really liked the first one. By the time the other ones came out, I was like, what is this crap? But I had a friend that really, really loved all of the other Land Before Time. That movie, Land Before Time, is traumatizing for me, man. Because the issue that I've had in like relationships and like emotional attachments in my life is like the anxiety about not being, liked by them or whatever the deal is. They're more interested in something else, and then they disappear on you, right? That's the anxiety that I get. And that's what happens in Land Before Time. Land Before Time, his mom dies. And so then he's trying to form new attachments. And what does he get? He ends up in this anxious avoidant relationship with that stupid Triceratops Sarah. Screw that Triceratops. I hate that Triceratops. So I'm watching this now and I'm like, dude, you just run. Get away from her. All she does is cause you pain and trouble, right? He would have made it on his own, probably would have found these other people on his own, and they could have been friends without Sarah coming along, trying to steal all of his friends and treat him like crap. Screw her. And they wouldn't have gone through as much other, trouble either, because Sarah's the reason that they all get stuck in tar pits and crap, right? Screw Sarah. Seriously. Right? That movie's traumatizing to me. Especially there's the one scene where it's like they're going to go to sleep and they're all like, well, we're going to sleep with Sarah. Why? What has Sarah done? Why? What has Sarah done? You all want to sleep with her. I don't get it. But then they all end up with a little foot anyways. But that's what ends up happening, right? Is eventually in the long run, people prefer the secure relationship in the long run. That movie, can you tell just the way I'm talking about it, that movie is traumatizing for me? Alien is a good movie too. I don't know if I'll show it to my 5-year-old, but maybe when they're like 8. When they're 8, Aliens. I mean, Alien is kind of, there's some lessons in it, but Aliens is one of the greatest movies of all time. So here's the thing that's so cool about Alien is that there's different like story tropes, right? And the story trope for Alien is destroying the beast. Okay, so there's some monster and you got to kill the monster. That's the story. This is a story archetype, right? But this one is different because it's a woman attacking the beast, right? But like that's the whole thing, is that women can protect too, because women protect their young, right? They don't go out and fight in the army because women are more valuable, but they do protect their young, and that's what they did in Aliens. Was she protected the little girl? Turned the thing on its head. It was a good variation on the trope that, kept it interesting, but also revealed some, interesting truths about society and stuff that was really interesting. No, is E.T. an alien movie? Have you never seen E.T.? Dude, E.T. is Steven Spielberg's best movie. I probably just said something way too controversial because everybody was like, no, Jurassic Park is Steven Spielberg's best movie. I think it's E.T. E.T. the Extraterrestrial. Yep. E.T. was the movie. Like, Steven Spielberg had really good movies before that, right? But E.T. was the one where everybody was like, wow, Steven Spielberg is the greatest director of all time, etc., etc., etc. It was when E.T. came out. So you got to go and watch E.T., man. That's your homework this weekend. Watch E.T. Tell us what lessons we learn about society. Because I don't know. That's why I want to watch it. We watched Bambi last week for what lessons we can learn from society from that one. So now we got to watch E.T. Forex Live says US 30-year approaches 100-day moving average. My mom and dad were head over heels over it. I bet. I'm just seeing Forex Live here point out that the 30-year yield is approaching the 100-day moving average. I come over to the daily ZN. Yep, I can see it's right there. Ooh, but that might be why they backed off there. You come over to the chart here. So again, if there are like mean reversions in the spread, then maybe this is a spot where they need to mean revert back to the 50. I don't know. Maybe when you look at this chart, just looking at this chart, okay. Oh, this is actually very, very interesting to me. Right here, okay. This is the 2-day move that we were having, right? We have had some other big moves here as of late. But when we go back to the whole rest of the history that we have here, do we have anything even remotely comparable to that? Well, here's one. Here's one right here is maybe comparable. There's definitely days in here that are comparable, right? August of 2019. Yeah, because there was a little bit of weakness back then, wasn't there? I don't know if the rally that we're having here in the treasuries is really sustainable or not. If it is sustainable, then it really suggests to me that like we're heading into very, very dire economic straits, you know? Oh, I missed one of the messages here. VG, where can I know more about your trading strategy? Is there a video? The most valuable pieces of information that I can give you are contained in the 2 more recent videos that I've had about the inelastic market hypothesis and the stylized behaviors of markets. And in both of those videos, I talk a little bit about what my general trading strategy is. I am making some videos on treasuries to give you some background information about how I approach treasuries that I think will be very valuable. Then past that, I think I need to write a book. I think I really need to do it. Like maybe I need to. Well, and I need to keep making videos, but I might be just a different type of videos. Like, think that I'll need to make videos that are a little bit easier to write because some of these ones are really difficult to put all this stuff down. But I need to give myself more time to write a book because, you know, when I to me it's just like second nature. But for somebody that's just starting out, man, that it must be such a overwhelming thing to pick up, you know? But the way that I would explain it is like this, VG, if you're still there. I'm sorry I didn't see that until now, but um I'm mostly trading news, right? So my take on it is like news can move markets, end of month rebalancing options can move markets. All of this stuff about technical analysis and, you know, take a trade when it crosses the moving average or bowling, you know, it's all nonsense. I ignore that stuff as much as I can. So the reason we're so interested in this chart over here is because we were reading earlier this morning about mean reverting strategies in the treasuries. And I'm thinking that we may be at a point where the mean reversion matters. And that might have been why the treasuries sold back so hard. Was that somebody, a really big player, did come in and started trading against it in the 30-year for mean reversion's sake. What do you think? You think that that's the case? Oh, does Anthony Crudelli have a? Oh, that's different. Space. Is that a new Twitter feature? Is Space? Twitter Spaces? Spaces is a way to have live audio conversations on Twitter. I don't find that all that compelling. Why would you? Well, I mean, obviously, if you're already big on Twitter. But if you're not big on Twitter, why not just use YouTube? I should probably tweet about my live stream more. I need to think. If you guys have any ideas, let me know. Send me messages. Ways that we can promote the live stream itself a little bit more. Because YouTube isn't doing as good of a job as it used to. And I think that we need to pick up some of the slack there. I'm really been thinking about lately my obligation to build this community and the tools that I have and to make money off of them so that we can make the community even better and help you guys even more. So I do have some things that I'm trying to do with the indicator package. I got to tell you, man, if you're using NinjaTrader and you haven't tried out my indicator package, you're trading treasuries. You have to. I don't see how you trade treasuries without like the spreads and stuff like that. I think it's very, very valuable. So I'm thinking I'm going to put more resources into trying to promote that. And I'm trying to get like videos, like repurpose some of the content from the stream, but I don't know if that one is going very well. Interviews with YouTube traders. I think that doing interviews would be really great. I don't really have that many connections though. I mean, there's a couple of people that I would like to talk to though. If I can. Time for that one is not yet though. I don't know. Like the thing is that the channel continues to just grow consistently, and we've done, we're almost to 8,000 subscribers now. So it was only a little skip. Like, the thing is I could make a video that just does really, really well next week, and all of a sudden the channel could have 20,000 subscribers, That's always a possibility out there. And I think that, in the end, inevitable that it will happen at some point. Just more famous YouTubers? Yeah. Like, that's the thing, is that I don't really care to, somebody that's using price action, I don't really care to talk to them. No offense to those price action traders, but one of the reasons why the stream kind of turned into the way that it was, because when I started this, it was really just me recording my stuff, right, for that contest on Futures.io, and then for the first year or so, I just would upload it after the fact, right? Then we started doing the live streams, and once we started doing the live streams and I started talking to people and I saw the questions that people were asking me and stuff, it was like, oh wow, like I am much more knowledgeable on this subject compared to the base level of knowledge out there, far more than I had ever dreamed or realized, right? So it kind of turned into, even though I don't know everything, let's build this up as great as we can, and we can find edge together. And I think that we have. I think that the difficulty is that the market's always changing. And so yesterday I felt like it didn't really understand this market. Today I think that we had some opportunities. We had some good stuff going on. I'm not too sure about the next week. Well, I guess we got the Federal Reserve, so we'll see. But I'm a little concerned, but that this market is starting to confuse me again, and that I need to back off a little bit. Right? That's the problem with the way that we trade. But we did learn a lot about the market, and it's valuable stuff that anybody that trades, I think, should know, because people would approach trading differently if they knew this stuff, right? So I think there's a lot of good that we can still do, and that we should keep focusing on building the stream. One of the ways that we can do that is we can look at the monetization options that we have. So again, if you end up buying Jigsaw or you end up getting a new squawk, and I have to say, if you don't have a new squawk, I highly recommend getting a new squawk. Financial Juice is $70 a month, or you can do a lifetime subscription. Not sometimes. I don't know if that one's available right now, but you click the link in the video description below. That, and if you end up purchasing that, that helps the channel out, or if you end up purchasing Jigsaw. And then there's my indicator package. So if you have NinjaTrader and you haven't tried my indicator package, you absolutely have to try that, right? And what we're going to do is we're going to take that and we're going to put it into paying people to help us promote and build the channel faster. So what we're going to do with that. So I would get rid of the bottom ladders and put up 2 naked 1-minute charts. Yes, ZN showing yesterday's high and low. Top ladders will make more sense. Well, except for that, I'm actually those are the ones that I'm actively trading. I've only been putting the orders up in here as sim orders because I've been waiting for them to fix these DOMs in here, and then I'll go back to putting my orders in the micro 10-year. I don't know about that part. Like here's the thing. If it comes down to just what brings the most traffic or whatever the deal is in terms of like what you can see on the screen, then the most useful thing would probably be just my face and a big chart of the S&P 500, right? Otherwise it's confusing. So I don't know if that one actually makes a big difference. Now, what we talk about while we're trading, that maybe makes a difference. But, you know, it's hard to know what people will like and not like and all that sort of thing. I thought that whole discussion about Bambi was fun. But what did the live stream think about it? It was just kind of meh. That's how it goes. But you know what? The stream is usually light in the summer. It's been many times, many summers where it's like midsummer. We only have like 10 viewers. And then after that, it really blows up, right? Like that's what happened for the 2020 thing. Was like summer of 2019 was pretty dismal. And then it picked back up in the October, December. And then the whole COVID thing happened. And then we got into some periods where the channel was pretty popular through 2020, so that when 2021 came along, then, you know, we were able to take advantage of all that stuff. You love the Land Before Time. Every once in a while I'll get on that one because it really did. I honestly believe that Land Before Time affected my development in some way. And I'm not entirely sure if it was a positive development or not. It would have been a really positive development if my parents had known the things about attachment theory that I do, but that I know now. Then it would have been more beneficial. But oh well. It is a classic. It really is. All right, guys. I gotta get going. I will see you on Monday. I'm gonna try and get a video out, so hopefully we'll see that on Monday. In the meantime, stay profitable, friends. Oh, hey, and by the way, if you're new, make sure you click that subscribe button, click the bell icon. That makes it a lot easier to find the stream. You can also, there is a permanent live stream URL in the video description, so you can go and visit that and bookmark that to find us in the morning. Right. Stay profitable, friends, or at least don't lose it all.